Hello, my name is Geeta Sankappanavar. I'm the CEO of Akira Impact. As an investor, I believe that you should always understand the lens within which a person views the world in order to understand the biases we all bring to it. I am a serial entrepreneur, business builder, investor, and allocator. Most recently, I've taken two companies public. I have run a billion-dollar energy and infrastructure investment firm. And I also care deeply about the world we live in and the people within it. I chair the Board of Governors for the University of Calgary, as well as I've served on the board of UNICEF Canada. And I'm so looking forward to having this discussion with you today, Tim.
Well, thank you so much, Geeta, for being here. It's really my pleasure. Um, let's jump right in. You just mentioned that Akira Impact is focused, obviously, on impact investing. I'd like to ask you how you define impact investing broadly, but also in the energy and infrastructure spaces in which you operate.
So, impact investing's definition is evolving. It used to be more philanthropic in nature. So, now, today, it's about leveraging the power of capitalism to create the world we want to live in, as well as create a positive economic return for ourselves. So, today, Tim, ESG is the most popular impact framework. It stands for a focus on environmental, social, and governance. It is about companies and capital supporting multiple stakeholders, not just shareholders. So, why should you care as an investor or a business leader or an individual? You should care about impact investing because global ESG assets are currently $38 trillion and are already on track to exceed over 50 trillion just in the next couple of years, which is more than a third of projected total assets under management, according to Bloomberg. I'll make it real for you. Green Impact Partners, full disclosure, I am an investor and I chair their board, is a green energy and infrastructure company listed here in Canada, actually just last year. It is developing a portfolio of RNG assets across North America. And RNG, or renewable natural gas, is the definition of environment within the ESG framework or within the impact investing framework. It is part of the circular economy where the company is taking farm waste, converting it into renewable natural gas, which is creating significant demethanization and positive environmental outcomes. And it's even better than something like solar, where a carbon intensity score would be plus 50. And in RNG, it is minus 200 to 300. And you can sell RNG in the United States for north of $60 a GJ. And in Canada, you can execute a infrastructure contract for 20 years with an investment grade counterparty for over $25 a GJ. And so this is an example of where you can do good for the planet and the people who live within it, as well as make money for yourself.
Obviously, the equation you just put out, good for the planet, good for yourself, and obviously good for our investment portfolios, makes perfect sense. With that lens, how do you see, or how would you describe the prevalence of impact investing here in Canada? You mentioned that it's a multi-trillion-dollar industry globally, but how are we performing at home? And how do you see the space evolving? Where do you see it going in the next couple of years?
That's a great question. I think it is absolutely critical for Canada to get this right. Our nation stands at an inflection point. Three of our largest industries in Canada are mining, natural resources, and manufacturing. And as a country of approximately 38 million, we do not have the breadth and depth of capital markets to fund all of our business activity. So therefore, that makes us reliant as a country, as industries, as businesses, as individuals, for our national well-being to be able to attract capital from outside our borders. And this is about leveraging the incredible entrepreneurial mindset, talent we have in our country to reimagine our industries to be better, to be more sustainable, to be more community oriented, to support and be inclusive. And understanding this evolving mindset of the impact investor and being able to participate as a nation, as businesses, and as individuals in this evolution, it's just not the right thing to do. It is critical for our nation because it's good business. It will allow our companies to be able to attract talent and capital that shares the same values that they do. And to the point of your question on evolution, um, there are two primary trends in impact investing that I think are very interesting in the evolution process of the sector in the last few years. One is it is no longer a single asset class or sector, but rather it is now a lens, or it is viewed as a lens from which to view all asset class investing. And we can talk more about that in a moment. But the second trend is, and this is a more recent and growing one, is it's probably very nascent, but I can see it growing almost exponentially, is a shift from thinking about impact or ESG from a passive screens perspective, which is only looking at corporate behaviors, to actually thinking about it as a way to drive active, measurable outcomes. And in terms of thinking about how to think about it as an asset class or something different, in Canada, I think impact investing needs to be thought of to measure and allocate capital across all existing and traditional asset classes. And in terms of thinking about where its future is for not just Canada, but for the world, my view is that over the next decade, just given the rate and pace of change that we've already seen, every single asset class will be tied to impact and generating measurable social environmental outcomes in some way. And those who do not recognize this and adopt it will be left behind. It's very fascinating to think about who is driving this change, because it started with the millennial generation who have led the change on this destructive mindset, which is demanding this alignment of thinking about the planet and the people within it, coupled with corporate activity. And they have driven increased investment in this space. They have driven behavior change. And we've already seen this past year the largest number of inaugural ESG reports by companies across every single industry on the S&P. And this is a generation that is about to inherit $24 trillion in this decade as a result of wealth transfer. And so imagine the impact that they will make as they drive this forward. Because right now, almost 90% of millennials expect impact and ESG factors to be considered before an investment professional recommends an investment. And that is just, these are numbers that you cannot ignore.
Absolutely. The weight is obvious and it's there. You have a long and very respectable history within the Canadian energy sector, and you're based in Calgary. You just spoke about this big shift that's happening and that will continue happening, especially as millennials gain control of a lot more money that will be invested. Um, how do you see the Canadian energy sector reacting to the change that is already upon it, but also planning the next 5, 10 years in terms of how it's going to align itself with these expectations and the values that people want to see their money supporting?
The Canadian energy sector has been abandoned by not just the national government of Canada, but it also is been abandoned by global sovereign, institutional, and private capital because it doesn't align with their vision of ESG. It is a different category. So therefore, it is funding itself right now with cash flow and conforming bank debt. And it is just not big enough on the individual company sector basis today to invest in thinking about renewable energies and other technologies. But over time, there is a significant opportunity in Canada to leverage the technology, the entrepreneurial mindsets, the incredible talent that exists in our traditional energy sector to actually help drive the energy transition. And I think the intersection of that is going to be around carbon offsets, regulated carbon offsets, and verified voluntary carbon offsets. And where it's going to go in the future is because we are not supporting the Canadian ethos of ethical oil, of supporting industries that are actually supporting inclusiveness, diversity, and supporting the communities that they're within, that are the best environmental stewards in the world for per marginal barrel, because we have just tarred all barrels by the same feather, pun intended. What we are doing is we are substantially driving a nation that is not going to be part of the next evolution. And so, what we need to do is we need to help our industry transform itself as it goes. But here's where size matters, Tim. When you are a small energy company in Alberta, you do not have the breadth of capital to be able, or the depth of capital to be able to invest in renewable energy. And so we have to be supporting this industry as it winds down, but also supporting all of the new entrepreneurs in clean tech and in sustainability, because the people who built this industry have so much to add to diversifying Canada's economy going forward.
I want to put you on the spot one last time by asking you to put somebody on the spot. I want to ask for your pitch. If you could pitch anybody in Canada, PM, industry leaders, academics, whoever you are, with the goal of increasing impact investing or making it easier, making it more accessible, making it better in Canada, who would you pitch and what would you urge them to do now specifically?
Tim, I would definitely not pitch the prime minister. I wouldn't want to waste my time, because clearly he doesn't understand that the single biggest driver of creating positive social impact is a strong economy to ensure jobs for all. I would choose instead to pitch Canada's largest capital allocators. They understand their own stakeholder dynamics and desires, our pensions and our largest capital allocators. And I would tell them, allocate your capital through a lens that will help make your money matter more. Align your investment lens to generate measurable positive environmental and social outcomes, along with the positive financial return that you seek on behalf of all your shareholders. And this can be done across every asset class in every sector. And there is such tremendous power in your voice that you are the right group to start by making your money matter more, and this would allow you to achieve your investment objectives and outcomes, but also allow you to build the world that we all want to live in.